All right. So I wanted to go over this Euro USD trade that I gave out to the chat. Beautiful trade. Obviously, not ignoring patterns, but just it. We already know what patterns are, so I don't have to keep putting patterns in. But for pattern traders' sake, this was the head and shoulders, right? Classic head and shoulders that we learned from IML, or whatever, and it's there, but whatever. I don't pay attention to. My eyes were like, okay, it's head and shoulder, whatever. News was on its way. This is the M5, right? News was on the way. I had these supply areas, so I told you guys to sell right here. You know, the confirmations, and to sell right here. If it gets, so what I'm saying is, if it gets right here, get in the sell, put your stop loss, and get your 15 to 20 pip move off that. And then that happens to not work out, then wait for it to come back here. Or if it does work out, that's good. If it come back up here, do it again. Get your 15, 20 pip move off of that. So what ended up happening is this in the market. I had a really beautiful day in the market. I'm very excited what happened. I knew that the dollar was going to strengthen because obviously the Feds were still hawkish on the dollar. Um, Inflation is still at what, 8.3, and I knew that Powell had to bring up the interest rates by 500 basis points. They've been saying that for a long time on Bloomberg. So I already knew what was going to happen. It was one of those no brainers. So this is EU. I see the head and shoulder on the M5. It looks terrible on the higher time frame. Just red candle after red candle, red candle. And see, me back in the day, I would just put a buy in and just wait. But why do that? And you could just trade the way that I'm teaching you guys. Wait for it's just imagine if this was the H4. Don't look at it as the M5. Think of this was the H4. On the H4, I would be telling you the same thing. When it comes right here, we're gonna wait for the break, get in. Wait for the candle break and get in and sell. So we apply the same rules on the M5, especially if the market is bearish and very, very, very bearish. You could just sell off these M5. So what ended up happening is this. Let's go slow. So market did this. Okay. It was dropping. I was waiting patiently. I told you guys to already wait for these areas. So I waited patiently. And it came up to my zone. I think I got in already. Or did I get in? No, I didn't get in yet. Didn't come up to the zone yet. And news was on its way too. It's kind of slow. Let's make it go faster. A little bit faster. Let's move this over here. All right, so right there. See, I wasn't playing games. I wasn't waiting for no break and no candle or nothing like that. I got in right there, stops below, and I had my TP right there. And I had two positions in. I actually end up one end up hitting. I was gonna like, okay, one's gonna hit TP, and then I'm gonna ride the next one because news was gonna happen. So I had the stop loss in, so I'm protected. Stop loss is protection. So this is what ended up happening. That. So I had that move off the M5. That was the news. 11 o'clock. One hit TP, and I had this one that was down here. I closed it somewhere down. I was like, no, close it. I ain't gonna lie to you. I put a buy down there because I knew it was gonna come back up. So I took the buy that I didn't give you guys also a buy up. But that's neither here nor there. So now that's over. When I saw this happen, and I knew at 11:30 Powell had to talk. So I'm thinking, okay, hopefully you guys understand this supply is still here. This is still a supply. Okay. So this is what ended up happening. Beautiful day today. Beautiful trading day. So it came up because Powell started talking about all the great things. So it came up. And right there, I was in. And I had it right there. This is even better trade. And look at that. TP smashed. And I could have held it because it went more. It went all the way down. And honestly, these moves, because usually I would have just had it like that. These M5 moves are literally about 20, maybe from the range of 15 to 18 pips, sometimes 25 pips, depending on the entry. This entry, you can, I need 20. I make sure that my 1% is literally, I make my 1% about 16 pips. So once it hits 16 pips, if I'm doing 20 pips at 16 pips, I'm at 1% right here. I'm up 1%. This, I'm up a little bit more. I'm cool. That's all you need, especially if we're trading prop firms and stuff like that. 20 pips a day can really do the thing. And by the way, if you guys took that Euro New Zealand, we're in profit now with Euro New Zealand trade that I gave out. This is easy for prop firms. Even if you risk half to make, like, try to make it your 1 to 2s. Like, if, let's say you risk 10, okay, so if you're risking 10, then you want to make 20. Let's see, so 20 would be right there. And we do this every New York session with these pairs over here. These are the only pairs I look at during New York session. Well, don't not these J's, but AU, GU, EU, NU, UCAD, UCHEF, NAS 100, SP 500, EuroCAD, and UJ. And I got to put CAD JPY on there because Canada is a New York pair too. I only look at New York pairs, and I do these M5 setups on New York pairs only. And it was a beautiful day. I had that trade, and I also took a USD CHF trade down here. This was a zone. This was a zone. I took this one today too. Is this even it? No, it was this one. This was earlier on, like earlier. So it went like this, tapped, came back, tapped again right there, and I got in. I didn't call this one out. This is one of those personal trades. And I was aggressive all week because I knew what was going on. So I was aggressive with this trade, and I took it up. How many pips? I think I took 25 pips. 25. I think that was a 25 pip move I had, so had to been 25 from entry. My entry was somewhere around there. Doug Curtis, just do this from here. 25. So I got out right there. I could have cleared all the way back up because usually if it usually will come back to the highs, but I took 25 and I risked less on this. It was like a quarter. I was just trying to show somebody something, as far as supply and demand in real time. And honestly, since the market been acting funny, I haven't been taking a lot of I'm a swing trader by heart, but now I've became a scalper by heart. I get my money in and out. I'll still swing trade and intratrade, but this scalping strategy that I learned from Doyle, I learned this trading style from Doyle. Doyle trades supply and demand like I do. but his supply and demand is different. It was different than mine's. Mine's wasn't breaker structures. I wasn't looking for breaker structures and stuff. I wasn't, I was sometimes looking for reversals with my supply and demand and all that, and sometimes I got crushed. But his was so high probability. I took it upon myself to relearn supply and demand and make it better for me. So that's basically in a nutshell that happened today. Hopefully you guys are taking the trades, and we're literally in the Discord. If you look, we are 5% for the week right there, and I put that sell in Euro New Zealand. So we're up 5% for the week. If you had a prop firm, you're up 5% if you were live. That's good. Taking 20 pip moves. You can't beat that. Instead of getting in these long trades waiting for TP to smash, we getting good, nice 20 or 18 to 20 pip moves depending on how the supply and demand looks. And even on NAS 100. Like, I don't know what that was. That's probably me playing around. Even with NAS 100 and stuff, like, if we go to the M5, here's the M5 right now, right? On NAS 100. Some consolidation right there. Not really. Let's just say it's gonna come back down demand because it made a little baby demand right there, and it tapped down there, right? If we only get on NAS 100, see that number right there, 26 points or something like that, like something small on that. But with a prop firm, imagine putting 10 lots right here, and we were coming. Let's say we got in this trade right now. Let me see. Because I like NAS 100s and stuff. I mean, I haven't seen this. We took a lot of NAS 100 trades yesterday, last week, I think, or something like that. Let's say we was in this trade right now, but you had 10 lots. And from here to here. So that's like 47 pips. 47 or 47 points or something. I don't know, whatever. 10 lots, that's still good money. You gotta use whatever lot size that's gonna equate to 1%. It ain't about how many. It's not about super duper pips. No, it's about the right lot size. Get our 20 or 25 points or 25 pip move. Get to 1%. Get out the market. Go live. Go enjoy your day. We don't want to be staring at these charts all damn day. You know what I'm saying? See how it's reacting right there? It tapped it. Well, shit, some little stuff like this. This is Wyckoff. So if we would have got in right there, we'd be in profit right now. Imagine putting a high lot in right there. You know what I'm saying? On the M1 or lower time frame. See, now it's dropping. On a lower time frame, that'd be something. But anywho, so hopefully you guys are learning. I want to get more input from you guys. And see how your trading is going, and see if you can, or if you're getting this, because I want you to get this stuff down packed. JPY has interest rate. Yeah, JPY has some interest rates news coming out. So JPY is going to be changing their interest rates, and I don't know if it's still weak. We're going to keep having a climb up on UJ. If it strengthens up, we don't know what's going to happen. But anyway, I will see you guys on the next video. Hopefully you learned something. Peace.